And Ghana's export values are high, but there's one commodity that is making us have a rethink of how to do business when it comes to the commodity space. And so tonight, we are focusing on guarding against uncertainty, building buffers in a fragile, global economy. Why? Because this is a country that depends so much on export revenue. I'm talking about revenue from, gold, cocoa, there's also oil. But, you all know recently the stories around, cocoa has made us have a rethink of how to, think around when it comes to trading in the commodity space. I'll tell you the story very soon of how cocoa has become how not to rely on commodities. But this is not new, right? Because you remember, since 1978, or even since independence, we've had one shock of the or another from commodities. And almost all the time when this happens, we really have to rely on the IMF, sometimes for bailouts and sometimes for structural adjustment. 2023, 2024, and 2025 were the good years of cocoa, where we were cashing out. If I say we, I'm not sure Ghana could say we cashed out, because at that point in time when cocoa prices were on the rise, we had logged in at a stable price of about $2,000 per ton. But prices went as high as $12,000. Farmers could not benefit, government could not benefit. And the year that we decided that, well, we are deciding to change our model, we possibly would want to sell on the spot market, this is what is happening. It tells you that commodities is one, possibly you can say a blessing or a devil that you cannot really rely on, where cocoa prices since the beginning of the year, they've actually fallen by more than 20%. And for the last time we checked, from the highs of 12,000 to now about 3,600, prices have fallen by more than 60% since those highs. And government has had to respond by cutting the farm gate price of cocoa by 28%. This is a very significant haircut. It reminds a lot of people about the DDEP that actually occurred in 2023, 2024. Farmers would have to now use the price around 2,587 Ghana cedis per bag. And if you know how difficult it is to bring together cocoa beans to form a bag, you know that this price is very, very low, considering where global prices went. But tonight we are having an interesting conversation on how to guard against global uncertainties as far as the commodity space is concerned. And for cocoa board, for instance, we understand that because of the price drop, government is saying that, well, even after the haircuts and the restructuring and the transfer of bad debts from cocoa board books to other books, government will still have to pay about $150 million as losses as a result of the drop in price. But fast forward, we know that government is absorbing that 5 billion cedis, debts from cocoa board, and we also know what is happening in other spaces. But I want us to focus on these three commodities. And in fact, if you are looking at our exports revenue, or in fact the figures, these three commodities are what we boast as a country in terms of high inflows: gold, there's cocoa, there's oil. But recently, there is one Goliath in the room who is currently holding all three. And maybe because of that, we are not feeling the impact of what is going on in the oil space and in the cocoa space. Because why? We are getting a loss from gold. How much are we talking about? Close to about 21 billion US dollars is how much we're able to get from gold exports in 2025. Compare this to how much we're getting from cocoa and how much we're getting from oil. Peanuts. 20 billion or 21 billion as against 3.9 and 2.6 billion US dollars. That tells you that, well, currently our attention is on gold. We've set up Gold Board, which is bringing in some $10 billion, brought in some $10 billion in 2025. The expectation is that it should be able to bring in more than that in 2026. But there's a trade-off always between gold and cocoa, because the same land used for gold mining is sometimes also the same land used for cocoa plantation. And so whilst you are sacrificing your lands for your gold, you're also sacrificing, the same thing in the cocoa space, where even this figure since 2009 is the highest we are even getting from cocoa. 3.9 billion US dollars. And you ask yourself, if we are getting so much, why has government had to even cut cocoa prices at the farm gate price? But we all know what is happening in the global market as far as oil is concerned. And as a result of that, we all know the stagnation in the oil industry at the moment, where we are only getting about 2.6. We used to get more than $3 billion every year, but now we have to settle around some 2.6 billion. But let's talk about reserve. If you're talking about building buffers, usually the first indicator we look at is the gross international reserve. How is it looking like so far? Currently 13.8 billion US dollars. You ask yourself, a country that was able to export gold of about over 20 billion US dollars in 1 year, that same country has reserves, gross international reserve of 13.8 billion US dollars. That tells you that we've not done a lot when it comes to building reserve. Whenever it goes above 3.5 months or 3 months of import cover, we say that we are on a good trajectory. But we all know that when there's that slight or small shock in the global space, these figures will come down significantly, and that affects our balance of payment and usually will land us in the surgical room of the IMF. We shouldn't be talking about 3.8 billion reserve. This should be peanuts for Ghana because, 1 year you exported more than 20 billion in gold. Your reserve should be very high. You are the second largest producer of cocoa. You produce oil as well and other commodities, non-traditional commodities as well. We shouldn't be talking about 13.8. We shouldn't actually be boasting about 13.8 billion in reserve. We should be in the space of about 50 billion and some even say about 40 billion in reserve, so that when the days of reckoning comes, we should be talking about close to about 1.5 years of import cover and not to maybe boast around 5.7 months of import cover. Let's look at the commodity space, how that has panned out over the years, and you can see our reserve over the years, and the highs of 13.3 or 8 billion is what we are celebrating at the moment. But I showed you how much we were able to export in terms of gold and why we should be above this figure. And I really wanted to take you to the trend analysis when it comes to the commodity space, because this for me is important. Pricing, right? How has gold, cocoa fared? And this is the template or the test case at the moment, and maybe an opportunity for us currently at a crossroads to actually turn around and say that we're going to do things differently, because at a point in time, you see where cocoa prices were. I showed you about 12,000 US dollars, but now we are talking about a producer price of currently around 2,587 Ghana cedis. And you ask yourself, gathering cocoa beans to form about 64 kg for one bag for 2,000, close to about 2,600 should be peanuts for farmers, and farmers are demanding for more. Because do you know what is happening on the international space, where if you look at gold, for instance, currently, the reason why our gold exports are high and the reason why government itself is hoping to introduce a sliding scale in terms of royalties, about 5 to 12%, as whenever, prices go up by more than $100 or $500, government is hoping to add 1 percentage point to it and get more from royalties. Why? Because they see this curve, gold prices are rising, government is hoping to get more from that. But beyond royalties, where else should we be looking at in terms of building buffers for the future? And you can see this. This is not something that we really want to talk about, because in the crude oil space or in the oil space, we all see what is happening, where currently price per barrel is around 61.6. We budgeted around $75. See where we are, and the reason why you talk about 2.6 billion US dollars in terms of inflows from oil. And in fact, talking about cocoa, currently it is that commodity that has given us that kind of pause to say that let's have a rethink. How do we build buffers to actually stand on a very firm ground in a global space that is always changing? Sometimes it is gold, sometimes it is cocoa, sometimes it is oil. How do we build buffers? How do we build hedge to make sure that whatever happens, we will be on the winning side? After this short break, my guests will join me and we'll find solution on how to build buffers, especially coming from the commodity space. This is PM Express. Stay with us. Thank you very much for staying with us here on PM Express. And PM Express, you always know, is brought to you by Synthes Tank. It is strong, it is tough. Pepsodent Cavity Fighter, toothpaste, and Stanbic CIB Impact Series. Now, let me tell you a story about the secret to water storage in Ghana, because if your tank doesn't have the tortoise on it, then it's actually not the correct tank. It is simple. Synthes Tank is a tank that is built to stand against strong weather. It is strong and durable, built to actually handle our Ghanaian weather, rain or shine. Synthes Tank, a strong, a tough. Now, you know that I always tell you that after PM Express, you need to brush before you sleep, because every time we eat, food and sugars are trapped between our teeth, leading to decay, gum disease, and in some cases, foul breath. Brushing your teeth every morning and night with Pepsodent Cavity Fighter. This prevents cavities, keeps your teeth strong and mouth healthy. Stanbic CIB Impact Series, you know, some see challenges, but Stanbic Bank actually sees opportunities, because where others spot risk, Stanbic Bank will always unlock value. And at Stanbic Corporate and Investment Banking, they partner with businesses driving Ghana's and Africa's, growth. And you know that from energies to mining infrastructure to trade, we stand ideas, we finance ideas and enterprises that improve economies. Call 030281589 to speak to Stanbic CIB team, or visit stanbicbank.com.gh to get started. Stanbic Corporate and Investment Banking, driving growth, creating sustainable impact. My guests have joined me on the show. Should I say tonight I have a two-set problem? I have those who belong to the Finance Committee of Parliament and those in academia as far as the finance space is concerned. But let me introduce those in the Finance Committee space, where Ataisa will be joining us shortly. He's a member at Finance Committee, NPP, and MP for Sagnerigu. Professor Bobquin is in the other side of the set. He's an economist and professor of finance, University of Ghana Business School, and Professor Williams Kwesi Pepra is associate professor of finance, Andrews University in the United States. And Fred Asamoah Kyei is member, Economy and Development Committee of Parliament. Gentlemen, you're welcome to PM Express.
Thank you.
Thank you.
Ataisa, I think you'll be happy to be a member of the MPP.
Yeah, but Ataisa is actually an NDC MP and MP for Sagnerigu. Ataisa, I'm not sure he would want to be on the blue side. He's very comfortable at the green side.
No. I think he's happy. I know Ataisa. I think he always wants to be a member of the MPP.
Okay, let me welcome the gentlemen on Zoom. Professor Bokpin and Professor Pepra, you're welcome to PM Express.
Thank you.
Thank you and good evening.
You saw the analysis. I really want to start in studio with you, Honorable. I saw the analysis. In fact, many are saying that what is happening in the cocoa space should actually give us a time to actually pause and ask ourselves that, in terms of building buffers for the future, how do we even chart that part in terms of creating buffers so that when some of these shocks come, we'll not find ourselves wanting. But even before that, I want to pick your thoughts on this. We've had a lot of blame games in terms of what happened in the cocoa space. Many have said that it is as a result of wrong forecasting. There are also those who say that, well, the FOB price that was set was really high. What's your view on why we are at this point in terms of the cocoa space? We know that there's global shocks, but in terms of our own space, what did we get wrong?
So I believe that we in the minority offer some solutions, some things that we had initiated prior to we leaving government, and we questioned the NDC government of the fact that this economy is on steroids. It's completely on steroids, and nobody can stay on steroids forever. If you go into the health sector, you realize that you can give people steroids for a certain number of time. And you cannot run economy on just commodity prices. The fact that they had some missteps in terms of their projections and calculation. If you look at the price of cocoa, early part of 2025, it went as far as $12,931 or so dollars, which was a huge money. And even when it came down, it was averaging around 8,000. So the idea that we are now failing to pay farmers because we made a wrong decision is not tenable. Because if you look at opportunity cost, you realize that every farmer will want to move into gold business. There's no incentive to stay in the farming business, which is part of the real sector of the economy, not the non-real sector of the economy. So if there's no price credibility, because one, you promise a farmer that I'm going to pay you 6,000 plus per bag. Now you came back and you said, okay, because of the gold price, the world market of cocoa, so I cannot afford to pay you the 6,005 that I promised you in 2024, but I can pay you 3,006 in 2025. Then you, that same person, come back again and say, no, I can't pay you that 3,006, but I'm going to pay you 2,005. It tells you that now we don't have credibility as far as the farmer is concerned. If we promise them that we are going to pay them this amount, we are not going, because we will keep on changing. So for me, for credibility's sake, and for the Ghanaian farmer to continue to be in farming so that we can continue to improve on cocoa production and other cash crops, I believe that government should find money and pay the poor farmer. I come from Offenso North in the Ashanti region, from Nkwankwa all the way up to Afrancho. Majority of my constituents are farmers, and majority of them are cocoa farmers. You want me to go and tell my constituent why I cannot pay them the 3,005, for which some of them have already taken loans as against what they were going to get from government. So credibility in the market, in economy, is very important, because then they can be assured why I should invest in farming, why I should add my young one to go into farming. So I believe it's a misstep, but the government can cover, make up. So whatever we have to do, whether we have to go for a special bond, a special cocoa farmer bond, maybe over 5 years, so that we can pay the cocoa farmer their money, the 3,006 or the figure that we gave them. Government should pay that money to the farmer. In that case, we can restore some kind of credibility, because I'll come back to the reason why I believe we have to. If we do that, it means that for the long term, we are going to be expecting increase in cocoa production, so that when there's an increase in price, that gap in there can be used up to taking care of whatever bond that we have taken to cushion the farmer. So for me, that credibility issue is something that I think the government will never be forgiven by the farmer.
Well, I'll come back to you more on the cocoa sector, and then why you think that it's an issue of credibility and why the farmers' price should be restored. But let me go on Zoom and speak to Professor William Pepra. I mean, Prof, per where you stand, what did we get wrong? Was it wrong calculation? Because the blame game is still on. There are lots who say that we got the FOB calculation wrong. There are those who said that we waited too long to sell the beans. Which school of thought do you belong to? Why are we at this point, and why are we struggling?
Good evening, and thank you for having me on your show. If you ask me, I belong to a different school of thought, not the two of them. My school of thought is that there is heavy politicization in the cocoa farming industry. Let me put it that way. And when it becomes that way, it makes it very difficult for us to see the actual benefits that must come from decision making. The world market price, as we all know, especially with commodities like cocoa, which has very ease of use and frequency of conversion, is highly price sensitive. So whatever decision one will take, will have to always remember that the price can go up or down based on one, need for the product, and also any market fall in terms of weather and the rest. As to why we got here, we all know that it has already been projected that supply was coming too much on the market for cocoa beans. So we should have anticipated that this will come down. Just after COVID, where we realized that cocoa beans was moving up because there was shortage. And if I were to be part of the team then, I would have strategized that price will come down, and whatever price we are giving to the market, to the cocoa farmers, would have factored in another strategy to probably to establish what I may term as a commodity stabilization fund for all the commodities we have, gold, oil, and put a certain percentage in that fund so that anytime there is this kind of price fluctuations, that fund will be used to support whatever a shortage in the system. But if you look at our system, we don't have such commodity stabilization fund established. Whatever comes in, we don't keep reserve. We just decide to give X percentage to the farmer or to the producer, and then the government keeps the rest and we use it straight away. So in my perspective, we could have planned very well, knowing that the price was coming down, and politicization put much pressure on the government to go on their promise to establish this 70% or threshold, which has caused this whole decision.
Great.
And yeah,
you can continue, please.
Yeah, and one other thing, whether we do forward trading or spot trading, each decision comes out with its own merits and demerits. So the decision the current government took was to be out of forward trading and do more of. They've given their reasons because they said we didn't have the beans to go into the forward trading, and so they were doing more of spot market. So if you are doing spot market, what it means is that it does not give you room to go and guarantee price for the farmer. So in my perspective, this is where policymakers got it wrong. Once you have decided to use spot market transactions, you cannot guarantee prices. So that is why we're just coming back to reduce it now. So going forward, policymakers must look at how are they going to strategize and probably have a little blend of forward trading where you have locked in some prices, and that will give you an advantage to be able to guarantee price for the farmer.
Let me go to Ataisa. Earlier, I put you at the blue side of Parliament. Would you want to remain there?
I thought we jumped.
Hello.
Mr. Ataisa, we can hear you. I'm saying that earlier I introduced you as an MP of the MPP. I'm asking if you would like to remain there. We're actually struggling to hear you. If you could. Can you hear me?
The line is breaking.
I can hear you now.
Hello?
I can hear you.
Yeah, I can hear you.
Please go ahead.
If I'm and you have a problem, you are already.
Unfortunately, we are struggling to hear Ataisa. But I mean, you had Prof over there, which is creating sort of buffers in terms of stabilization fund. And I remember maybe Prof may have lost track of that, but there's a cocoa stabilization fund, which your administration in 2017 pick money from that fund when we had premium beans, when we had light beans and we're selling at premium price. We picked money from that fund. Governments brought in some level of subsidy to actually pay cocoa farmers when prices fell around that time. What happened to that fund?
I think maybe we will have to ask the people in government to give us some explanation to that. But just to follow up, we are saying that there was no beans for us to do the forward trading. But now it's going to even make it more worse to be able to get the beans because of the credibility issue I raised. Because if now the farmer is not assured of what the government is telling him or her, that means that it's going to be a bigger problem to be able to get the beans to do the forward trading, since the cocoa price is not stable. You move from 12,000, now you are in
3,600.
3,000. This government, I'm saying, is government on steroids. It's basing its economy on commodity prices. And since commodity prices can fluctuate, you cannot make decisions on that. Let's take gold, for instance. In 2001, gold was selling around $300, right? A little bit below $300. If you look at the gold price, as you showed on your presentation before we came in here, it's as much as $5,000 per ounce, right? In 2024, when MPP government was in power, gold was averaging to 2,000, right? So with the $20.9 billion that you are talking of in 2025, it's as a result of price escalation or price increases in gold. So if it was to be an MPP time when we had gold price being 2,000, that means that we would have been bringing in just a little bit below 10 billion, right? Now, we from the minority side had been telling government that this economy is on steroids. It's basically a commodity price-driven economy. We have to look at the real sector economy. Let's look at the budget performance. If you look at all the ministries in government, you realize that government did not spend. Government simply did not spend. Contractors were not paid. We are only looking at the statutory funds. But if you don't spend, contractors don't get paid, the education sector, the health sector, the agricultural sector, there's no proper production within. And you show up you increase the value of the cedi, which is appreciated about 36%. This is what led to increase in importation, because import prices have reduced. And that, in that case, is going to increase the rate of import and import products. So it means that the cost of imported products are going to be very cheap, and it's going to give you some kind of a sense of reduced inflation. So we are looking at inflation figures single digit. So we are mostly thinking about just inflation targeting economy. And inflation targeting economy, if you are not careful, you are going to appreciate your currency. When you appreciate your currency, it's going to increase importation and it's going to decrease exports. Now, for jobs to be really created, you need to make sure that your economy is export driven. In that case, the local economy will be resilient. If, for instance, today, gold prices is supposed to come to $1,000 per ounce, how are we going to run this economy? Where is Bank of Ghana going to get the extra foreign currency to be able to show up into our economy, to sterilize the economy? And that's what Bank of Ghana has been doing, sterilization of the economy based on commodity pricing. My friends, we in the minority, we want this economy to succeed so that when we come to power, we can take this economy to the next level.
But Honorable, just to come to you, you were also hoping to cash in on the gold boom, for instance. You were also, banging your hopes on the same commodity, doing gold for oil, doing gold for reserve, another gold for other deals, right? You were also hoping.
No. That was if you look at what the MPP was doing. Remember, in 2025, this economy is surviving partly most of the things the NPP did, and partly what is happening in the international market. One of the external shocks that came in with drop in cocoa price is what we find ourselves now. Okay, but what we NPP were doing is the local economy. We had the 1D, 1F, the one district, one factory. All this the government was to do for the 2025 economic year was to invest in it, make it viable. If I was the NDC government, I would have made sure that the 1D, 1F survived. It was stable enough, because if you want to go into 24-hour economy, what is 24-hour economy? It's demand-driven economy. And if you don't allow factories that have been initiated by your predecessor to be successful, and you tend to collapse that policy, and you saying that you spend one whole year with reduced production, and you are talking about catching up with just commodity prices, it's not sustainable. So all that we are saying is that we should invest in local economy, the small and medium-sized economy. Let's make them robust. Let's make sure that we can increase our exports. Don't think that you are weakening or you are appreciating the currency to be able to improve on your economy. You see, American dollar, the US dollar, is to, the weakening of the US dollar is to improve on export. Because when they improve on export, that means local production will increase. They will create more jobs, and in turn will help the economy. So that is all we are saying. 1D, 1F is a laudable, brilliant idea by Akufo-Addo and Bawumia that I believe that if we had not stopped and had continued to support them, we would have been doing well. But this is where we are.
You speak about SMEs and you speak about projects or flagship projects like the one district, one factory. I don't know if you can mention about 5 of the one district, one factory that are still functional a year after you have left office.
That's the question we should ask the...
No, I'm asking...
No, but that's the question
but, I mean, these are factories
that's the question,
they spend time over 8 years, some about 8 years or over 7 years to actually establish some of them. I don't know which of them is currently running even after you left office. That is the
question for me and you. That's the question we will have to ask the current government, because now the current government came in and he said that that policy is not working, so they collapsed. But there were
does that mean all the
and I'm going to get you the list.
Yeah.
As we go through this, I'm going to get you a whole lot of the lists before I leave here. But what we are saying is that if you want to do 24-hour economy, 24-hour economy doesn't sit in space. It's demand-driven economy. Demand-driven economy. If you look at the logistic industry alone, you look at the Western world, logistics and transport is a huge economic sector that if there's enough demand, you can create so much jobs. By the time you get up, you see that somebody can produce tomato in California, and that tomato will be in New York to be sold. Because we have demand for the tomato in New York, you'll be there. But what do we see? We don't have the demand, and we said 24-hour economy. While somebody was creating the demand, and I'm going to get you the list of the
We'll come to the expansion of the conversation, but I want to bring in Ataisa at this point. I mean, your colleague in Parliament is saying that your economy is running on steroids, and steroids from commodities, and that is why currently farmers are seeing the haircut they're seeing. What's your response to that?
And good evening to my colleague and to your viewers. First of all, I would like to just make some few corrections before I answer your question. Number one, Ghana is not recording trade deficit, as my brother wants to postulate, because he's of the view that we are getting more imports because imports are becoming cheaper. But if you look at the official data from the IMF and the Ministry of Finance, it shows that for the first time in 9 years, Ghana has achieved a trade surplus. That's number one. Number two.
For the first time in 9 years?
In 9 years, Ghana has recorded a trade surplus, meaning that productive capacity of this country has enhanced, and also there is a reduced importation cost. Number two, it is not also true.
Hold on for me, because that fact is very important. You said for the first time in 9 years, Ghana is
9
now
years,
recording a trade surplus. You mean the
Trade
difference between
surplus.
imports and exports? Is that what you mean?
Exactly. Yes.
And what is the
And not primary balance. And I think people always make that mistake. But when we proceed, I will demonstrate that. The second one too is that Ghana uses what we call the managed float exchange rate regime. It is not the government of Ghana that determines the exchange in the market or in the forex market. And it is a widely standard practice that financial intermediation, whereby the central governments of an economy help to make sure that we have a stability in the forex market, it is done everywhere in the world. Even in countries where they do fixed exchange regimes, where governments of Ghana set prices of currencies, they still have to manage the forex market. So Bank of Ghana stabilizing the exchange through financial intermediation is a standard practice. In any case, when we pump money into an economy through the forex market, this is an exchange. You are collecting equivalent in cedis and providing an opportunity for businesses to trade with international competitors or transactions abroad. That is a standard practice, and it has been done from Nkrumah up till now. That has always been the standard practice. Now let's come and deal with this issue of 1D, 1F. Every policy has its own outcomes and objective. The idea behind 1D, 1F was one, it was to increase productive capacity of this country. Two was to generate jobs, and three was to bring down price of goods and services. As at the time MPP were leaving office, as at January 6, 2025, we still have unemployment rate hovering around above 13 to 14%. We had products or goods and services increasing at an inflation rate of 23.8%. We also still had more importation that created both primary balance deficit and trade deficit as at the time they were leaving office. So if it is a policy that was implemented by President Akufo-Addo, which of these matrices and objectives did it achieve? Which of them? So what better lessons should we use to analyze it? What is the matrix that we are using to analyze the success of a project or a program?
But Mr. Ataisa, let me ask you a very simple question. You speak about pumping money into the economy. Many have said that, well, the pumping of money into the economy is the reason why cocoa farmers are not getting value for the cocoa they've sold, because your cedi is overvalued.
So that is why I'm saying that it's ignorance, because I'm saying that Bank of Ghana do an exchange, they collect equivalent in cedis and give you the foreign exchange for you to trade. How is that amount to pumping money? And I'm saying that it's a standard practice across every part of this world, that countries that they do manage float exchange regimes, central banks intermediate to make sure that the forex market is strengthened. And in fact,
but there are those who say that the footprint of the Bank of Ghana is very heavy, and that's the reason why many have said that your cedi is overvalued and why farmers are suffering.
So
because
if they say that, let me just tell you so that you can respond to them. First of all, Ghana functional currency is the Ghanaian cedi, true or false? So if you want to import a commodity or you want to do foreign trade transaction, you don't manufacture any foreign currency in Ghana. The body that is mandated to regulate the forex market is the Bank of Ghana. And I'm saying that they are the only people that can supply you with the forex. And that is why they license the forex bureaus and other foreign exchange trading counters, because they provide the source for which this transaction can happen. And I'm saying that it's a standard practice everywhere in the world.
So is that a reason why you could not pay farmers the 6,000 per bag you promised?
That is another conversation you are introducing. So I don't think you should be mixing the two. You ask a specific question: is the cedi over, or is the dollar or the cedi overvalued?
In your opinion, you said no.
The explanation that they are given to overvaluation, it is not supported by the tradition of best practices anywhere in the world, because central governments across the world always intervene into the forex market, because one of their principal objectives of central bank is to guarantee one strong domestic financial market and forex market. In 2023,
let's situate the conversation. We'll bring it into the arena of the commodities. Many have said that, well, in terms of the cocoa space, you did wrong projections, you read the markets wrongly, you didn't take advantage of the spot price. That is why farmers would have to accept a haircut of 28%.
Okay, so just a second. In fact, your primary question that I wanted to respond to this basic beliefs, but let me come to your question. But you see, you can attribute all the reasons why cocoa farmers have not been paid the realistic targets. But the truth is that I appreciate the concerns of farmers, but you cannot run away from what led us to this situation. It is not the case that cocoa farmers have been denied their fair share. In 2022-2023, you signed a forward contract in 23-24 to supply 786,000 metric tons at $2,601. In that agreement, when the output came, in fact, in forward contracts, normally what happens is that you have the beans, and because you don't know the guaranteed price in future, then you offload your beans. In this case, for the first time in 32 years, Ghana didn't have any beans. We use projections of what we expect at 800,000 metric tons, and we are using 786,000 metric tons to forward sale at 2,661. Now, at the end of that year, we could only get 400 and something thousand metric tons. The remainder 330,000 metric tons. Even if the price has increased at the international world market price to $20,000 per metric ton, you were forced by the forward contract to still sell it at 2,661. So in any place where a government is insensitive, even if you are selling the FOB and giving 100% to the cocoa farmers should have been entitled to the $2,661. But magnanimity of government, where we are saying that no, we came and made a promise that we will pay 70% of the FOB price, that's the free on board price, to the farm gate farmer. At the time, there was no cocoa beans for you to even sell at spot, because all the cocoa beans that had accrued were used to settle the remainder of the forward sales. So if you are getting a product, the beans at this time, you've collected it from the farmers, but you have to supply it to the buyer at a rate of 2,661. Who pays for the difference to the farmer? In fact, the current disposition that government is adopting is that we are even paying 92% of the FOB price to as the farm gate price to the farmer, even though the rate had fallen. And let us get this right. After giving cocoa, fertilizers, scholarships, and all those, which is not in existence in Côte d'Ivoire, Côte d'Ivoire has announced a 23% cut in their farm gate prices to their farmers. In fact, most beans in Côte d'Ivoire currently are rotten. It is not peculiar to Ghana, but even though our own has severe underlying issues that occasion our difficulties, how can you in 3 years, you have a core function to produce cocoa beans and export? Now, in 3 years, now core functions of cocoa board, which is cocoa rows, you sign an award to a tune of 26.7 billion Ghana cedis for cocoa rows, which is a non-core function. And how much did you invest in the beans itself? As at the time Cocoa Board they were exiting office, we had a total liability of 32 billion, confirmed by the IMF under their third review. 32 billion Ghana cedis, which SOE will be indebted to a tune of 32 billion Ghana cedis and still survive. But I am not interested in the justifications. I am interested in what best can we do so that this situation never happens.
Okay, based on that, we'll come to the solution. But I want us to situate the conversation.
But let me finalize this thing before you move. I want to also correct something. If you say government is not spending on the real sector, what data are you using? Because the 2025 outturns suggest that the real sector has performed by 6.3%, higher than 2020. 5.7%. So what data are you using to know the real sector is not performing? In any case, if you look at statutory payment like my brother talked about, the concept of local governance was to ensure that development is encompassing.
Let's not go into that. Let's stay on commodities. Let me bring in Professor Prepra. I mean, many have said that looking at what is happening to cocoa, in terms of the gold space, there's gold board currently. We've started refining some of our gold. Many have said that after cocoa, maybe gold might be next. The setting up of gold board and starting refinery, would you say that this is a significant hedge to make sure that when gold prices also start falling, we'll not find ourselves in the same situation?
The gold board idea is very good. However, as I talked about the commodity stabilization account, you pointed to the one that exists is the cocoa one, and we also have one for petroleum.
Exactly.
If gold board will work, we need another stabilization account for the gold. And then also we know from history, gold price, even though it fluctuates, has always been going up. The only okay, so to understand gold trading, gold is traded on three main angles. One, when there is fear, inflation, and then currency hedge. We currently have fear on so many things happening in the world, which makes investors uncertain. So that is why we are seeing the gold price really, really moving up to that 5,000 that we have currently. In terms of inflation, IMF and World Bank project is being a little bit moderate. We've seen it in Ghana. For currency, we've noticed that the US dollar is devaluing, and that's why we see investors moving into gold. So we understand two main factors are the ones driving the price for gold. But the current system we have to me, the law is good. The operationalization is where we must watch it carefully and make sure that if the price, we all know it will start to come down. Gold has a little bit. So now that we are having this windfall, we should be able to establish another stabilization fund purposely for gold to put in that monies to guard against any shortfall that will come in. So my advice to probably gold board, central bank, and government is that whatever amount of gold sales that is coming that we are putting in our balance of payment account, can we create that fund just for gold? And then to make sure that when the price starts to drop, we'll be able to use this to support the gold industry in Ghana. It's good we are doing the refinery to add on value, but that commodity fund for gold is needed. The financing model for gold board also need to be looked at a little bit. It has raised getting money from the government of Ghana, which we know the amount they promised were not fully released in 2025. Bank of Ghana is going to exit in financing gold trade. So gold board must now look at, I think in their law, it allows them to take money in advance from whoever needs gold and then be able to give them the gold. So that model must be really looked at in how we finance gold board so that gold board does not turn to the next cocoa board as we are discussing. So the financing model must really be looked at. And gold board, they have a revolving fund. Revolving fund account is not the same as stabilization fund account. So we must start to think about a stabilization fund account for gold so that if price starts to drop, it's not really going to affect the economy. And that stabilization fund account should have a purpose and aim when to use it. And in general, the correlation between gold and other commodities are not all that very strong. Sometimes you see it being reversed. Gold has been very stable moving up. So this is what I want to say about those strategies that gold board must be looked at to make sure that at least if all the other commodities are going to experience high volatilities in price, gold price being volatile, we still have a fund that will be able to support us. If not, when we fail on gold, I mean, our trade balance will move into a very struggling position.
All right, Prof, thank you very much. Big risk currently is gold. I know you have a rebuttal, but I want to pick your thoughts on the gold space. Currently, there's that $240 million loss that we currently do not know whose books that will be put on, whether it will be put on the Bank of Ghana or it will be transferred to the central bank's books. But even with very high prices, we are seeing how much losses we are getting from the gold space, about $240 million as a result of we selling at a discounted price. What happens if prices begin to drop? Do you think that is going to pose a significant threat to the fortunes of government, especially looking at it on the tangent of what is happening in the cocoa space?
Yes, but before I come to just let you know, per the annual progress report of the National Development Planning Commission, 150 of the 1D, 1F companies are still in operation.
Absolutely.
And I have the list. If you want us to go through them, I'll go through them for your information. Then also let you know.
That will mean that this government is keeping up.
No. At the end of 2024.
Okay.
At the end of 2024, let's find out.
You want them to continue the program?
It was a fantastic program that we shouldn't have to discontinue it. Now, in 2017, the MPP exported 17.1 billion. Then, of course, imported about $13 billion. So as far as trade surplus is concerned, the MPP government started having trade surplus, positive trade surplus, since 2017. So it's no news. Now, if you look at the trade surplus they are talking about, it's heavily reliant on commodities. Look at basically gold, cocoa, and oil, crude oil. That's why we are saying that if we should rely on just commodities, and we are using that one as a benchmark to talk about a trade surplus, then we are in a big, serious time bomb. Steroids. And when steroids, nobody can stay on steroids forever. That's why we are not able to pay the cocoa farmers. If we want to stay on steroids and we had not continued what the MPP government was doing, we still remember, if you look at the performance of the ministries, go and look at goods and services, how the government performed, apart from paying statutory funds. So if we had focused on building the people, you talk about national apprenticeship policy, and it's collapsed. You talk about Nkukon Kitinkiti, how much is Nkukon Kitinkiti bringing us? So we are telling the government what he can do to sustain this economy before we come back to keep where we are going. Because now the $214-something million, nobody knows. Now everybody is blaming somebody. Who is causing it? Maybe the next time you see government will come back and say, I'm putting a budgetary allocation to cover this. And these are inefficiencies and gaps in the system. We need to sit down. We rushed the Gold Board Act through. And with anything that we advise the government, they don't want to listen. Look, as I'm telling you, every ministry has to go to Ministry of Finance for approval to be able to implement something. While the private sector is waiting for government to create the enabling environment, to create the jobs. Government doesn't create the jobs. Government promised to hire 50,000 teachers. What is happening? Nurses that have been hired are not being paid. There's so much backlog, about 70,000. Now farmers cannot be paid. The only person that can create a resilient system, economic system, for us to be able to keep employing our people. Now the world is moving beyond the 4th industrial revolution, gone already into 5th industrial revolution. The IT sector. What kind of jobs are we able to create so that this can bring in the trade surplus we are talking about? Not when, if gold, assume gold was to be at a price of $2,000 per an ounce. Would we have been talking about this trade deficit? I'm telling you, Ghana would have been crying. And of course, somebody has even initiated this gold purchase and left about 30 something plus. But and now we have even brought it down to 18. So please, let's be realistic. We want Ghana to succeed. The system that Akufo-Addo Bawumia government started 2028, with all the international shocks that came in, we were able to revive the economy and got it on its foot. Unfortunately, Ghanaians said that we should let another person try. I'm telling you, the best managers of this economy is the MPP. That's why we are some of these things we could have kept it to ourselves, but we kept warning them. When we had the 2025 budget, we warned them. We have warned them. Go and listen to the debate on the floor. We have warned them about the way things are being done. The question we are asking, will the anchor hold when the storms come? Don't be talking about you have the power to cast out demons. You should rather be thinking about whether your name is written in the book of life. And to do that, we cannot sustain it with just the commodity price, high commodity price economy. When the world prices goes down, we will be found wanting. If the economy collapses, it affects the opposition, it affects the government in power. Okay. Now, cocoa farmers in my constituency of Akumadai, Afran, they are suffering, they are asking, they are calling, how would they pay their kids' school fees? Now, even with the no fee stress that was promised to students, about 2,000 something, some students cannot afford accommodation. They cannot afford feeding. Even though we are saying prices has gone down, farmers are suffering. And we need to find some way, in interim, government should pay them. Let's quickly find a way to pay the farmers whilst we look at how best we can pick back. It's not too late to go back on the 1D, 1F policy that was initiated by Bawumia and Akufo-Addo. And let's pick it up and work on.
Well, Mr. Taisa, there are those who say that the risk attached to gold may take you to your 18th IMF program, maybe faster than debt sustainability. Have you created enough hedge to actually prevent this? Hello, Mr. Taisa, can you hear me?
I hear you.
Yeah. There are those who say that, well, you are playing with fire in terms of building your economy on the wheels of, booming commodity prices. And there are those who say that if you don't take care, gold prices or what you are finding in gold might take you to an 18th IMF program, maybe faster than debt and sustainability. Have you created enough hedge to actually prevent this? Hello? Well, let me pick Prof's view on this. Prof, there are actually those who say that, well, if you look at what is happening in the gold space, where we are currently in the outlier space, prices are above 5,000. And it's the same with cocoa. When price went beyond 12,000, we're hoping that we could cash in on the spot market. There are those who say that if we do not take time, the IMF will be leaving soon. By August, I'm sure they should be leaving. But there are those who say that if we don't play the gold game well, this could probably take us to our 18th IMF program, maybe faster than DDEP.
Yeah, I mean, so what you're saying is true, but we also can learn from other countries what they have done. Countries that rely on commodities to survive. South Africa is an example. Kenya is an example. So what they have done is to strengthen their commodity trading platforms and also laws in those countries where the commodity prices influences are not solely from external, but also the internal or the domestic commodity exchange also plays a very role in the pricing. For instance, if you go to South Africa, they have a very strong commodity exchange because they're also good in producing gold. Kenya, for their coffee, even though it's not treated like an exchange, but they have a very strong board, which helps them to mitigate these challenges. So as a country like Ghana, where we've seen that our trade balance account, our trade account, is heavily reliant on commodity, this is a time that we have to strengthen our domestic trading capacity on either in a stock exchange or anything to make price determination very easy, and also a way to reduce the pressures from external factors. So like we have Gold Board, for instance, they know the quantity of gold they buy in a month or in a day. This can enhance commodity trading activities on Ghana Stock Exchange. So I'm glad Gold Board is having a relationship with Bank of Ghana. They must extend it to the Securities and Exchange Commission to find ways they'll be able to list the gold trading on the Ghana Stock Exchange. You know, in that case, we determine the price. We don't allow the world market to determine the price for us. And that is one of the factors, one of the reasons why we have suffered also with cocoa. The price determination is not in our hands. is in the hands of external parties. If they enrich our development on an exchange, price will be truly be determined on an exchange, and our cocoa farmers will understand if, let's say, we have to reduce the price. It will become very clear, and Kenya has used that one for their coffee. So in my perspective, this is what we need to benefit fully from the commodity trading. It should not be like forward. There's also the exchange side that will enhance other businesses and also enhance investment in our country. It broadens the investment spectrum, and where we will see that, price determination will become very fair in that angle.
Okay, all right. We'll take a quick break. When we come back, we'll continue the conversation, especially how we can build buffers to actually make sure that we don't find ourselves in situations of 1983, that of 2001, 2002, and 2004, even that sent us to HIPIC. And even 2023, 2022, we will have a conversation on that, how to build back stronger and take advantage of the booming commodities markets. We'll be back shortly. Thank you very much for staying with us here on PM Express. And PM Express, as you always know, is brought to you by Centerstank, a strong, tough, Stanbic CIB, and Pepsodent Cavity Fighter. We're having an interesting conversation on how to build good buffers so that we don't find ourselves in this kind of situation again where cocoa farmers have had to accept 28% haircut in the reduction in the farm gate price of cocoa. I want to pick Professor Williams-Pepre's thoughts on the petroleum sector, because that sector for me is very important. If you see the numbers in terms of export earnings there, we've moved from the highs of over 3 billion cedis, now talking about 2.6 billion, US dollars. I want to pick your thoughts on it. How do we even build, a strong space in the petroleum space in terms of the upstream sector, because we know it's heavily laden with a lot of arbitrations, there are a lot of contract issues and all of that. And because of that, we've not really managed to get the needed forex from that space. I remember the president, when he took over from office, he said, those who want to actually come and drill, they should come over. We have enough. But it's been about a year after that call was made, and we've not really seen a new contract being signed. What is really wrong with our petroleum space, and why are we at this point, in terms of having very low numbers in terms of production and even inflows as far as revenue is concerned?
If you go back, we've noticed some of the companies left the shores of Ghana to Ivory Coast. So it's a factor of why our petroleum sector has suffered. Also, in terms of production capacity, some of our wells could not give us as we projected. Is also a factor. And then also with the U.S. Government policy now to use fracking to produce, to get more oil, it gives an anticipation of more supply coming to the market, and that's why the price keeps dropping. We notice also what has happened in Venezuela and these oil issues. People were hoping that it will move the price up, but it's failed to achieve that. So price side, we have not been able to keep up with our volumes, and the price itself has also gone down. That is why petroleum sector is suffering. And the bottom line is that petroleum, that sector is high risk investment with exploration. The uncertainties are very high, and the returns currently are not matching the expected risks. So that is why we are seeing these things happening, that investment is not coming in as we expect. The other side is that, can we protect whatever we have currently? I'm glad that TOR is working. Several times we've heard that they said Ghana oil cannot be refined by TOR. Do we still stand by that argument? Is there a way that we can look at that as well to make sure that whatever we produce within the country or the oil, some of them can be given to TOR, which is going to reduce the import of crude by toll to come in. So these are the policy issues government must look at to see how best this will help the whole system. And then also not only on the crude side, the gas aspect is also an important future. We know that this government is planning that they want to add more gas production plants. We need more details. What has happened so far? When they came into power, they were speaking about it very often, but now we don't know what has happened. When is a new plan starting? Who has been awarded a contract? We need more details to be able to make sure that at least the gas that is coming from the current wells are not being fled and then not being used. We know in the past we were also exporting some of the gas to our neighboring countries. Are we still doing it to bring in the inflows, or because of the demand, internal demand or demand in the country, we've stopped? Can we look at that as well to make sure that that sector is really enhanced? Then finally, the petroleum stabilization account, which probably needs to be investigated to find out how we use the money in that account. And can this current government assure us that they want to start building the buffer as they did in the past, so that with the generational effect, where they said I think they had two funds, one for the future generation and the one that we can use to stabilize the economy when it's in trouble. Even though the market price has dropped to 665 and that range, we still want to they must make sure that the fund is being used for the purpose being set for and utilized well, so that we can get benefit from it. The last part, have we trained enough human capital to take over the industry? I think you remember there were some discussions that we didn't have, they call them welders, those who weld in the sea or something. We didn't have that kind of human capital. By now, we should have developed our human capital to support that industry. And this was going to support a Ghanaian employment agenda and probably be able to take over. So these are some of the issues that I'm sure policymakers should be able to address and give us more information. But as we see it now, the petroleum upstream industry is still struggling, and I'm sure policymakers may come out with ways and policies that will direct us in the right, put us in the right direction.
Well, I'm told that Taisa has joined us on phone now. Two questions to him. One will be a response to the status of the second gas processing plant. But the first question to him will be on Gold Board and the fact that there are those who belong to the school of thought that the over-reliance on gold inflows possibly could take us to our 18th IMF program, maybe faster than debt issues. I want his reaction to that, if you can hear me.
Yes, I can hear you.
Can you go ahead?
Okay, so I will say that, yes, Ghana's economic growth is anchored on some commodities, gold, oil, and the rest. And it is tried knowledge that if gold prices fall in, the government of Ghana will have serious economic, fiscal, and financial pressures. And this impact will reduce in terms of the pressure that we're getting on our current. There will be serious financial exposure and current volatility because most of our foreign build-up is anchored on gold. And if something like that happens today, I think that we will suffer between the short to medium term. Now, there are ways that we can deal with it, or we are already dealing with it. First of all, it is also a fair knowledge that for you to leverage economic growth, you must diversify your economy so that we reduce the gold dependence. Yes, we know that gold is a major export earner for Ghana, so a price drop will hit our foreign exchange and revenue. So, one, through the 24-hour economy, the government this year intends to expand the agro-processing facilities beyond cocoa
the refinery aspects. You spoke about the fact that currently you're in the business of refining your own gold and not exporting it in raw quantity. There are those who have raised concerns about traceability, because at the moment, the system you have in place is just a pilot system where you put on board about 600 mining companies. And there are those who say that because you are not able to trace the source of the gold, you are likely not to be able to sell in the premium markets. You only be selling to the discounted market of the Saudi Arabias and the Indias. And that will mean that in some years to come, we may be talking about losses and even debt.
Yes, and I think that you are right. The gold board traceability has come. The gold board traceability has been on the table.
Honorable Chair, I mean, gold currently looks like is the biggest risk, is the biggest opportunity. The current administration have in place gold board, and you have actually criticized the fact that the act itself was actually rushed. In terms of how to sustain it and create buffers and hedge, what do you suggest?
Okay, so we all know that we're talking about 4.5 months of import cover, which we shouldn't be okay with.
Yeah,
it's not enough. Why? Because we know our gold reserve is being depleted already to get forests to show up the economy.
Currently, imports cover is about 5.7 months.
Yeah, but you remember that our gold reserve is being depleted. So it's not a good buffer enough. That's why we, as the minority, our position, like I'm happy they are listening, our position is the fact that, one, you need to create the sovereign wealth fund from the windfall earnings.
From gold?
From gold, it can happen to cocoa, it can happen to oil, it can happen to anything, because that is the sudden unexpected funds that we want to make sure this fund is in place. Then we're also saying that in addition to diversification and value addition, we also have to start looking at innovation-led growth.
Which is?
Innovation, because we cannot just be playing catch-up. The Chinese will say that copying is not stealing. Now, look at, we are importing everything. Electric vehicles, we are importing them. Now, look at how much electric vehicles is being produced in the Chinese market as compared to the American market. So we believe that we have to start looking at innovation. We cannot always play catch-up. Even if you want to look at value addition, you have to innovate. So if we have to come out with new product and services, that's part of innovation. And we need to be deliberate about it. Then, of course, we have always underestimated human capital. The people that are supporting the Western world coming out with new products and services, you can find Ghanaians in there, you can have Africans in there. What we need to do is to make sure that the NPP government started free secondary education, the human capital. Singapore and the rest, most countries don't have the resources that we have. What they have been able to do to improve on their economy, to be able to get these reserves, to make sure they have a resilient economy, local economy, is to make sure they have a robust human capital system. We're talking about 1D, 1F and all that. Where are the people that are going to work in this industry 24 hours? Do we have them? When I was at CTVET, Commission for TVET, the NPP government did a needs skill gap analysis. The data is there. We are talking about unemployment. Can we go back and look at this data that we have put up together? We have spent so much in it. Okay. You see, we were clear in our mind when we were talking about 1D, 1F. We were clear in our mind and we have the things in place to make sure it works together. If you can have a robust human capital to support your economy, of course, you won't have these issues coming up.
Thank you very much, Honorable Fred Asamoah Kyei. He is a member of Parliament and also a member of the Economic Development Committee. Ataisa is a member of the Finance Committee and also NDC MP for Sagnerigu. We're joined also by Professor William Kwesi Prepra, Associate Professor of Finance, Andrews University. Gentlemen, Thank you very much for being part of the conversation. This where time will allow us to peg our conversation. My name is Isaac Ofieje. Do enjoy the rest of our programs.